Hello, very good morning to all. I'm Kelvin here again. Welcome back to today's Daily Dose of Market Insights. Very good morning. Today will be the Wednesday, the 6th of August, 2025. So as usual, before we kickstart our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into the gist of the daily dose, which is the intraday technical outlook on the four major US dollar pair, the six major stock indices globally, and as well as the two key commodities market, which is gold XAU/USD and West Texas crude oil that we cover on a daily basis. Let's have a quick recap what has taken shape yesterday in terms of economic data, news flow, and as well as relevant news flow and data early this Asia session before the start of our daily dose at the 11 a.m. mark Singapore time that has an impact on this broad-based intraday price action movement of the broad-based cross asset classes. So let's start with yesterday's US session, all important ISM services data. So let me pull up my screen so that you guys could have a view of the charts. Yeah, over here. Okay, so like I mentioned earlier on, why ISM data is very, very important because it constitutes to, it's a leading economic indicator that measures services activity in the US, and services activity in the US contribute to 2/3 of GDP growth in the US, all right, in the last 20 over years. So yesterday's ISM services PMI data came in below expectation. Yes, it's still hovering at the 50 level mark. So anything that is above 50, it constitute a expansion. Anything that is below 50 represent contraction. But the rate of expansion has started to flattish. So for the month of July, the ISM services PMI came in at 50.1. Market is expecting 51.5. So it way came down below expectation and also inched down slightly below the previous month print of June, which is at 50.8. So if you look at the trend of the ISM services PMI data over here, all right, so what I could see if I were to look at the the 10-year trend. So it has starts to actually continues to inch downwards since the start of this year or since October 2025 at 55.8. So it continued to inch downwards as now it's hovering at the make or break level at 50. All right, over here. So what we could see over here is that rate of growth or rate of expansion has indeed slowed down for services activity in the US. All right, and what's interesting over here is that on top of this headline services PMI data as compiled by ISM Institute, they also have various subcomponent that is very important and that also could enable us to deduce the health of the US economy. And one of the subcomponent is services prices input. So take this as consider as the cost of business for the services industry in the US. So based on this leading economic indicator, services prices input, the subcomponent of services PMI, the prices continues to rise. That means the cost of input costs of the services sector in the US continues to rise, and they actually rose to a 3-month, or not 3 month, almost a 3-year high. All right, so market the forecast being done by this trading economics is looking at 67.7, only a slight increase from 67.5 in the previous month of June, but the actual number came in way above forecast and way above the June print of 67.5 at 69.9. So if you look at the trend of the ISM services input data, it continues to rise steeply over here. All right. Okay, so you look at the 10-year trend, right? It's going to rise steeply, and this 69.9 for July is almost a 3-year higher. All right, over here, previous October print of 2022 is 70.9. So that actually indicate that business cost is rising in the services sector of the United States, primarily due to the tariff effects over here. So what we could see over here is number one, services growth has started to plateau, flattish. However, input costs or the cost of business for the services industry in the US has started to rise to a 3-year high. So that actually represents stagflation risk over here. And this stagflation risk that is, and also one of the component I want to share with you is this services employment. So take this also as a survey based data, not actual data, because all these are soft data. So the services employment sub component of the services PMI also decline further. It's actually really in the contraction mode over here, 46.4 below 47.2 that was printed in the previous month of June. All right, so what it means that the hiring manager survey base, again, I would say, is not reluctant to add headcounts in the services industry in the US. So they continues to actually contract. So if you look at the 10-year trend, right, it continues to inch downwards to 46.4. So another signs of stagflation risk. So with this stagflation risk rooming in the picture again, or this stagflation narrative emerging back into the picture, that causes a bit of headwinds to the equity market over here. So the equity market US yesterday, almost all of them are in the red with the exception of the Russell 2000 that managed to close marginally higher at 0.6%. So all three major US stock indices, the S&P, the Nasdaq, and the Dow Jones Industrial Average, all of them actually tumbled, I would say. So the worst hit was the higher beta Nasdaq 100, down by negative 0.7%, the S&P down by negative 0.5%, and the Dow Jones marginally lower, negative 0.14%. So later I'll explain to you why the Dow Jones able to outperform against the S&P and the Nasdaq 100 yesterday is due to one of its major component stocks, which is Caterpillar, the third biggest weightage stocks in the Dow Jones Industrial Average, managed to inch up a slight gain yesterday after the release of its Q2 earnings. All right. So still recall that in my daily dose yesterday, I do mention that after Monday's sharp push up, it hit our short-term resistance level, and potentially all the major three US stock indices that we cover on a daily basis, the Nasdaq 100, the S&P 500, and the US Wall Street 30, which represent the Dow Jones Industrial Average, is at risk of shaping a minor pullback. And yesterday, the minor pullback actually fulfilled its expectation based on what we covered yesterday in my daily intraday technical outlook on these three major US stock indices. And more or less later I'll share with you this minor decline may have already hit its support level, and potentially there could be a bounce coming into play today. So later I'll cover the short-term intraday technical outlook on these three major stock indices when I cover the second segment over here. So let's look at the heat map of the S&P 500. Yes, we still we see three we call it rates on the S&P 500. Is it the start of a major disastrous decline again? But that could take shape from a multi-week perspective. So let's look at the heat map of the S&P 500. All right, over here we close. All right, so the heat map of the S&P 500 doesn't indicate that all of them, all 500 S&P components are in the red. There are still some pockets of green over here, what we could see. So the worst hit was the higher beta component stocks, especially NVIDIA, which is down by negative 0.97%, Metal down by negative 1.66%, and Microsoft down by negative 1.47%. So if you look at the heat map of the S&P 500, yes, more the rates are actually caused by the higher market cap AI driven component stocks. But if you look at other component stocks, there are still pockets of greens over here, and you break them down according to the 11 sectors of the S&P by looking at the groups. We start to see outperformance by several defensive sector, like the basic materials is up by 1.3%, energy up by 0.46%, and real estate, which comprises of REITs, up by 0.44%. And the worst hit were the communication services and the technology, and especially communication services due to metal platforms, which has a huge weighting in this communication services sector. All right. over here. So not all of them are actually not all 11 sectors are deeply in the red. All right, so there are 3 sectors that are managed to outperform, and they actually closed in the green yesterday, which is basic materials, energy, and real estate. So that actually indicate that yesterday's decline is more likely a minor pullback within a medium-term uptrend phase that is still intact on the S&P, the Nasdaq 100, and even the Dow Jones Industrial Average. So like I explained, Dow Jones Industrial Average managed to ended the day with a small loss of negative 0.14% versus a larger loss of negative 0.7% and negative 0.5% on the SPX and the Nasdaq 100 is due to this third biggest weightage component stock in the Nasdaq 100, which is Caterpillar. So Caterpillar actually managed to inch out a small gain of 0.12% after the release of its Q2 earnings before the start of the US session yesterday. And in the after hours trading, it also managed to extend it gain slightly higher to 0.16%. So based on the earnings results of Caterpillar, so it actually it showed mixed second quarter earnings and revenue, mixed I would say. Why mixed? Because second quarter profit dipped to 21% to 4.7 EP $4.72 per share. That's an EPS over here. So that actually was a slightly below market expectation of $4.82 Q2 EPS. Okay, market is expecting the Q2 EPS to come in at $4.82. But however, the revenue is higher. Actual revenue for Q2 is 16.57 billion. Market is expecting at 16.3 billion according to FactSet. All right, the data compiled to FactSet. And also, the management actually sounded rather positive. Yes, despite tariffs that being a headwinds that was being mentioned during the management we call it speeches during the release of the Q2 results. Caterpillar management also predicts ongoing support for demand due to federal infrastructure spending and the increased energy build-up over here. So due to this support of federal infrastructure spending, that could potentially cushion the headwind from tariffs. All right, so net result, the market participants able to actually send Caterpillar stock marginally higher yesterday. All right, so that actually lends some support to the Dow Jones Industrial Average. All right, so another news flow I want to share with you guys over here is there's actually this sudden resignation last Friday from of a Federal Reserve governor over here. All right, so this Federal Reserve governor resigned. Fed Governor Kugler resigned last Friday, and President Trump is likely to announce her replacement this week. And her replacement might be a dovish a candidate that is likely to be in favor of Trump's, or i.e. US White House policy. Still recall that Trump has been bashing Fed Chair Powell of his reluctantness to actually kickstart interest rate cut this year. So very likely the replacement for for the recently resigned Fed Reserve Governor Kugler may be more of a dovish nature, and that actually sent the US dollar rather we call it a slightly down during yesterday US session. So if you look at the 5-day rolling performance of the US dollar over here, so the US dollar was trading actually lower at the start of the at the start since the start of the US session yesterday on my cursor over here. All right, look at it. It's slightly lower. So if you look at the 5-day rolling, this is the 5-day rolling performance of the dollar against the major currency. So if you look at the 1-day rolling performance, it's actually very clear. It's actually inching downwards over here since the start of this day US session, and also the start of today's Asia session as well. So the dollar right now is the weakest against the Aussie and against the Kiwi. So the dollar is down by negative 0.24% against the Aussie, and down by negative 0.4% against the Kiwi. All right, as we are speaking. So one particular data that came out this morning that I want to share with you guys over here. Let me share with you guys. Where is it? Yeah. Okay, so this morning data came in. Over here is the New Zealand Q2 employment change data over here. So Q2 employment change came in within expectation. Market is expecting negative 0.1%. It came in within expectation at negative 0.1%. The unemployment rate for Q2 was actually slightly lower at 5.2%, and market concession is expecting slightly higher at 5.3%. So that actually explain the outperformance of the Kiwi against the US dollar as well, speaking, because the unemployment rate was not so bad, because market is expecting to take higher to 5.3, but it only came in at 5.2%. And one thing positive for Japan over here is that the average cash earnings year on year for Japan continues to rise steadily to 2.5% from the previous month of 1.4%, but that is slightly below below expectation of 3.2%. All right, over here. So with this continued rise on the average cash earnings for Japan workers, that could potentially boost consumer confidence and create a positive feedback loop into the Japanese equities market. So if you look at the Asia stock market performance right now, Japan is the outlier, is managed to up 0.62% due to the continued rise of the average wages in Japan. Okay, average cash earnings, but I share with you guys over here. The Nikkei, the Hang Seng Index open almost unchanged right now, at negative 0.02%, almost unchanged. And going to the rest of the other Asia, the China A shares CSI 300 is up marginally 0.14%. And if you go down to the Singapore STI, is also trading almost unchanged, negative 0.09%. So I would say that today is more like a consolidation day for the Asia Pacific stock indices after 2 days, of a rally from Monday to Tuesday. And today outlier is actually the Japan 225 that managed to actually stage a bounce with a positive gain of 0.62%, which I already covered in my daily intraday technical outlook on the Japan 225, which represents Nikkei 225, that we are now seeing the start of a new bullish impulsive up move, whereas the week long of corrective decline may have already ended. All right, so that's sum up the daily dose of market insight. So before we go to the second segment, let's have a quick look at the CME Fed Watch tool, right? That give us a gauge of the upcoming FOMC meeting in September. What are the Fed Funds futures traders assigning to in terms of expectation? Yes, despite stagflation risk that is coming back into the market due to the ISM print yesterday, the services PMI data and its subcomponent, market still, the Fed Funds futures traders still assign a high probability of 87% that the US Federal Reserve may cut interest rate on the next meeting in 17th of September to reduce the Fed Fund rates to 4% to 4.25%. Current rate is 4.25% to 4.5%. So that is an expectation of a 25 basis point cut to come in on the 17th of September. So that expectation is slightly down by 3 percentage point. Previously, before the release of the ISM data, it stood at a high rate of 90.4, and now after the release of the ISM services PMI data, it came in at slightly lower 87.5, but it's still a high percentage. So if you look at the aggregated tab where we start to see the probability assigned across different meetings, so market is expecting a high chance of 87% for the Fed to move in on 17th of September. And now it's a 50-50 chance that they may cut on do a further 25 basis point cut or the second rate cut on the 29th of October FOMC meeting. So previously, the chances was around 60%, so that has been reduced. But market now is looking at the second cut to potentially come in before the year end on 10th of December 2025 FOMC meeting, with a 71% chance that the Fed will ignite the second cut during the 10th of December meeting to bring down the Fed funds rate to 3.75%. So now market participants in the Fed funds futures market has now assigned only 2 interest rate cuts of a higher probability rather than 3 interest rate cuts before 2025 ends right now, due to that stagflation risk that narrative that has come back to the forefront after the release of the ISM services PMI data. All right, so with that, now let me now move on to the second segment of today's daily dose, which is the intraday technical outlook. All right, so let me expand my screen so that you guys have a better view of the charts over here. All right, great. So let us start with the FX market first over here. Okay, so let us start with the euro dollar. Okay, so the euro dollar yesterday we flipped to a neutrality stance over here since not even since yesterday, since Monday. So yes, since Monday the euro dollar continues to actually trade sideways between our neutrality zone of 116 figure and 115.25. So yesterday it retested the 115.25 level and staged a bounce over here. And what we could see is that the RSI managed to also stage a higher low. Oops, let me put it green. Okay, it staged a higher low as well. And if we will connect it to the low over here, yesterday's rebound managed to find a parallel ascending trendline support, which I drew from the low of 31st of July on the hourly RSI. So that actually indicates that, and also if we were to actually do a price action breakout on the hourly RSI, where previously there was this series of lower high over here, and yesterday price broke out above this parallel descending trend line, push higher, and now attempting to stage a bounce after the retest of it on this former parallel descending trend line that was taken out in yesterday's US session. So this observation on the hourly RSI that I share with you guys represent a return or an emergence of short-term bullish momentum condition on the euro dollar. So with this emergence of this short-term intraday bullish momentum as depicted by the latest observation on the hourly RSI, I'll be more confident for today to flip to a bullish bias on the euro dollar. All right, so for sure the short-term pivotal support level will be yesterday's US session low, which is close to the 1520 level mark over here. Okay, so this will be my, okay, give me a couple of seconds for me to actually do the adjustment. Okay, good. Okay, so let me change it. Come on. Okay, give me a couple of seconds. Okay, great. Finally it's up. Okay, short-term pivot. Okay, so I'm now confident for a bullish bias, and potentially there could be a potential breakout coming play above 116 figure level, and above 116 figure level may expose the next intermediate resistance level at 116.40, which is the 20-day moving average next. Above it may reinforce the start of a new bullish impulsive up move, given that the potentially the inflection level will be 1st of August, so this will be kickstart a new impulsive up move movement towards the next intermediate resistance zone after 1.1640 will be 1.1680, 1.1705, which is this minor congestion area over here of 22nd of July and 25th of July. And if we do the Fibo retracement of that prior sell-off, that actually constitute or confluence with the 76.4 Fibo retracement. All right, over here. However, if price action fails to actually do the expected bullish breakout and tumbled below 1.1520, that would invalidate today's intraday bullish bias view to see the euro dollar retesting 114.16 and even the 1st of August minor swing low at 114 figure level. All right, so that's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar continues to actually shape this higher low as well. And what we could see is that the RSI managed to continues to shape a higher low above the 50 level mark over here. And what we could see if we were to do a parallel ascending trend line, Okay, it continues to hold above this parallel ascending trend line that is in place since 1st of August. So that also indicate a continuation of bullish momentum condition on the sterling dollar. So for the sterling dollar, we have flipped back to a bullish bias since the start of this week, Monday. So continues to actually play this bullish bias since right now, if we start to see a bullish breakout during the European session above 133.15 level, I will tighten my short-term pivotal support to this level over here, which is close to this yesterday US session low at 132.50. So for now, I'll be still using 132.10 as my short-term pivotal support unless we have a clear bullish breakout at the start of the European session today that I will shift it up higher towards 132.50. So still maintain my bullish bias view for the sterling dollar for this impending bullish breakout of 133.15. Above it may seek out the next intermediate resistance zone at 1.3380/134.10. We also confluence with the downward sloping 20-day moving average. However, a price break below 132.10 and the hourly close below it will negate today's bullish tone and retest last Friday minor swing low area at 131.70/131.40. So i.e. still maintain my bullish bias on the sterling dollar in anticipation of a bullish breakout above 133.15 on the sterling dollar. Next up will be the Asia Pacific currency against the dollar over here. So where is the okay, this one. All right, so will be the Aussie dollar. All right, so the Aussie dollar managed to stage a bounce as expected from our first support zone at first support area at 64.55 over here, 64.55. Nice little bounce over here, but still remains below our first resistance level at 65. All right, it hasn't broken above 65 Fibo 65 resistance level, which is very close to the 50-day moving average, and this former minor swing low of 21st of July and 29th of July now turns into a critical near-term pullback resistance level. All right, so given that it hasn't broken above 65 figure level, I don't want to tighten my short-term pivotal support level to be so tight to this 65 to this level here, to this 0.6450. I'll still use 0.6420 as my short-term pivotal support level. Still maintain this ongoing bullish bias for this recovery to extend further to the upside above 65 figure level, at least in first step, may expose the next intermediate resistance zone at 6540/6550 in the first step over here. So if we do the Fibo retracement, okay, this will be the prior steep decline retracement of the golden ratio of 61.8%. Right, of this previous steep decline from 24th of July all the way down to 1st of August. All right, so the Aussie dollar is also shaping this potential recovery as well, and this could be the start of a new impulsive up move sequence over here. But for sure, the new bullish impulsive up move sequence will increase in probability if we have a very clear breakout above the 61% Fibo retracement ratio at 65.50. So for now, still maintain the intraday bullish bias with the short-term pivotal support at 65.20. Unless we have a bullish breakout above 65 figure level, then I will tighten my short-term pivotal support to 64.50 during the European session. However, a price break below 64.20 will negate today's bullish tone to see a further extension of this corrective decline to test the medium-term pivotal support area at 64 figure/63.90. We also confluence with the 200-day moving average, and as well as the ongoing minor medium-term ascending trend line, right, that I drew from the low of 24th of April. Okay, so that's for the Aussie dollar, still maintaining our bullish bias. Next up will be the dollar yen. So dollar yen, still recall yesterday we are looking for a bounce. All right, so the bounce almost almost take shape at 148.15 level before it turned flattish at the 20-day moving average over here. All right, okay, it turned flattish over here. So with that, I will start to flip to a intraday trend bearish bias for today, given that the hourly RSI seems to be reacting negatively from this descending trend line resistance. all right, over here. So with that, I'll be using 14875 as my short-term pivotal resistance level. Okay, if you do the Fibo retracement of that prior slide, that is the 50% Fibo retracement. All right, so using 14875 as my short-term pivotal resistance level, I will flip back to my bearish bias for today, given that the minor counter trend mean reversion rebound or corrective rebound of the dollar yen has almost fulfilled its expectation, and given the latest bearish momentum condition that is being formed on the hourly RSI, which I shared with you guys, where price action now starts to shape a lower high, and it starts to react negatively from this parallel descending trend line over here, indicating the lack of upside momentum. So with that, I will flip back to a bearish bias using 14875 as my short-term pivotal resistance level. First support level to watch for today's bearish bias view will be 14680/60. A breakdown below it, seek out further weakness towards the 50-day moving average, also confluencing with the minor swing low area of 24th of July, acting as the next near-term support level for the dollar yen at 14585. However, if a price push up above 14875, that would invalidate today's bearish bias view on the dollar yen to see a squeeze up to retest the 14950 level, which is the 200-day moving average as well. So that's for the dollar yen, flipping back to a bearish bias for today. All right, so that sum up the intraday technical outlook on our four major US dollar pair. So now let us now proceed to the major stock indices, starting with the Asia Pacific region, with Hong Kong 33 representing the Hang Seng Index. So for the Hong Kong 33 representing the Hang Seng Index, we maintain our bullish bias for yesterday, and price action, as we are speaking right now, managed to actually do a intraday break above our first resistance level at 24,790 / 24,890 level. So with this potential bullish breakout, and also this ongoing higher low that is being formed on the hourly RSI, and the hourly RSI right now hasn't hit the overbought region yet, indicating a build-up of positive upside, a positive bullish momentum on a short-term basis. Okay, so with this latest positive observation that's being seen on the hourly RSI, I will actually tighten my short-term pivotal support level for today at 24,480. Okay, at 24,480. To seek out the next intermediate resistance on the Hong Kong 33 at 25,220, followed by 25,520, which is the minor swing high of 28th of July. And however, if price action starts to break down below 24,480, then today's intraday bullish bias view will be negated to see a retest on the 24,140 level, which is so constitute a confluence with the rising 50-day moving average and close to the lower limit of this medium-term ascending channel that is in place since 2nd of June. All right, so still maintaining a bullish bias view on the intraday basis for the Hong Kong 33 with adjusted tightened pivotal support for today at 24,480. Next up will be the Nikkei 225 representing the Japan 225. So the Nikkei 225 representing the Japan 225 also inch up higher, and it staged a bullish breakout above our first resistance level that we mentioned yesterday at around 40,645. So this will become a first pullback support level to watch later part of the Asia session. So with this bullish breakout of our first resistance level at 40,645 yesterday, we will still maintain our intraday bullish bias on view on the Japan 225. So for now, for today, we will have a tightened short-term pivotal support level at the 20-day moving average over here at 40,300. So this will be a normal support level. Okay, using 40,300 as my Titan short-term pivotal support that confluence with the rising 20-day moving average, we'll still maintain our intraday bullish outlook on the Japan 225. Next intermediate resistance level to watch will be the 41,285, which is the minor swing high of 31st of July. However, if price action break down below 40,300, that would negate the bullish tone for today to see a retest of 40,130. Only a breakdown below 40,130 will open up scope for a corrective decline sequence to revisit the 1st of August minor swing low area at 39,740. So that's for the Japan 225, maintaining our bullish bias with a Titan adjusted short-term pivotal support at 40,300 level. Next up will be the Germany 30. So the Germany 30, yesterday we flipped to a bearish bias given that it has already hit the 50-day moving average, looking for at least a bearish reaction of it. So for now, if you look at the hourly RSI, the hourly RSI is not showing any signs of bearish momentum coming back into the picture as the hourly RSI continues to trend higher over here. All right. So given this positive observation on the hourly RSI, I would not be so convinced in terms of my conviction to maintain my bearish bias for today on the Germany 30. So with this positive observation on the hourly RSI, I will flip to a intraday neutrality stance for today on the Germany 30 over here. So despite there was a test on the 23,930 short-term pivotal resistance and interim break above it. So for today, I will have a neutrality stance. So neutral between the intraday high yesterday of 23,990. Okay, neutral between 23,990 and yesterday's European session low at 23,790. Yes, that's the US session lower. So neutral between this 23,990 and 23,790. So if we start to see a breakout above 23,990, then the bulls are back into the picture again for the Germany 30 to revisit the next intermediate resistance level at 24,110 next, which also confluence with the 20-day moving average. However, a breakdown below 23,790 will flip back the bias back to the intraday best for it to retest 23,600 and even potentially the 1st of August minus swing low at 23,390 next. So that's for the Germany 30. Due to a positive observation that I explained on the hourly RSI, despite yesterday's so-called test on the pivotal resistance level at around the 23,930 level, I'm not convinced of to maintain my initial bearish bias view on the Germany 30. So I'll flip to a neutrality stance for today between 23,990 and 23,790, pardon me, on the Germany 30. All right, so next up will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30, yesterday I do mention that do look out for a minor pullback. So the minor pullback actually takes shape and managed to bounce off right at our first support level at 43,900 level. So given that it hasn't broken above 44,390, which is our first resistance zone, and as well as the 20-day moving average, acting as the similar resistance level as well at the 44,390 mark, I will still be using 43,750 as my short-term pivotal support level for today on the US Wall Street 30, still maintaining our bullish bias for this ongoing recovery to extend that has been in place since the start of this week. Above 44,390 exposes the next intermediate resistance level at 44,780, still using 43,750 as my short-term pivotal support level to maintain my bullish bias. So unless we have an hourly close during the start of the US session that's able to break out above 44,390, then that I could shift my pivotal support level up towards 43,900 level. However, if price action instead of reversing to the upside and it starts to inch down lower and stage a bearish breakdown and the hourly close below 43,750, then that would invalidate today's intraday bullish bias to retest 1st of August swing low area at 43,475. A breakdown below 43,475 may see the extension of this ongoing minor corrective decline from 28th of July 2025 to manifest to extend further towards the downside to seek out the next near-term support level at 43,170 next. So that's for the US Wall Street 30, still maintaining our bullish bias. Next up will be the S&P 500. So the S&P 500 also shaped that minor corrective decline as expected and managed to stall at the first support zone at 6,300, 6,290. All right. So for that, we still maintain our bullish bias given that it managed to stall at the first support level, and the hourly RSI also managed to shape a positive reaction from this parallel ascending trend line support level as well, indicating the return of positive bullish momentum, at least in the short term, for the US S&P 500. So with that, still maintain my bullish bias, no change. Pivotal support will be at 6,270. First resistance zone to watch will be that pullback zone that took shape yesterday, 6,330, 6,348. So unless we have a bullish breakout above 6,348, then I would tighten my short-term pivotal support level to 6,290. So above 6,348 may seek out the current all-time high area in first step at 6,430/6,450. Only a bearish breakdown below 6,270 will negate today's bullish tone to retest 1st of August swing low area at 6,227. So that's the SPX 500. Next up will be this Nasdaq 100 over here. So the Nasdaq 100 also managed to stage that pullback, and that pullback also managed to do a U-turn right above the pivotal support that I highlighted yesterday at 22,900 level. And also the hourly RSI also managed to bounce off from a parallel ascending trend line, indicating the potential return of bullish momentum, at least in the short term, for the Nasdaq 100. So still no change, still using 22,900 as my short-term pivotal support level. Two resistance level to watch for today on the intraday basis. Firstly will be the 23,146 level. Okay, followed by the pullback reaction resistance at 23,313. All right, over here. So these are the two resistance level to watch to maintain my bullish bias for today. A breakout above 23,313 will solidify our bullish bias and the start of a new impulsive upmove sequence to retest the current all-time high area at 23,710. However, a bearish breakdown below 22,900 will negate today's bullish bias view and see further short-term weakness to expose the next near-term support level at 22,650. So i.e., in a nutshell, still maintain our intraday bullish bias for a further recovery on the Nasdaq 100 after yesterday minor corrective pullback with 22,900 as my short-term pivotal support level. All right, so that covers the intraday technical outlook on all the 6 major stock indices. So let us now focus our attention to the commodities market, starting with gold XAU/USD. So still recall that gold XAU/USD, yesterday we do expect a minor pullback to take shape. So the minor pullback actually bounces off our first support level at 3,345. It bounced off, shape a marginal higher high at 3,390 before pulling back again in today's Asia session over here. So with that, it seems to us that there's this support zone that's being formed, 3,345, 3,334 over here. So given that it hasn't cleared above 3,402, that's the next resistance level to watch. We will still maintain our bullish bias for now over here. So if you look at the hourly RSI now, okay, there's this parallel ascending trend line that is holding. All right, over here. So given that it hasn't broken above 3,402 level, I don't want to tighten my short-term pivotal support to be so tight. So I will still use 3,334 level as my short-term pivotal support level on gold XAU/USD to be bullish in any potential minor corrective pullback. Still maintain my bullish bias towards the upper limit of this complex sideways range configuration for gold XAU/USD. above 3,402 exposes 3,439, 3,447 next, which is the minor swing high area of 23rd of July. That's the upper limit of this sideways range, and as well as the minor swing high area of 13th of June. However, if price action starts to do a bearish breakdown below 3,334, then today's intraday bullish bias will be invalidated to see gold floating down towards the lower limit of this complex sideways range, with the next intermediate support at 3,310. Below 3,310 exposes 3,264 next, which is the minor swing low area of 30th of June. So that's for gold XAU/USD. Lastly will be the West Texas crude oil over here. So the West Texas crude oil, yesterday we flipped back to a bullish bias, pardon me. Yesterday we flipped back to a bullish bias. Why? Because the decline has really retested the lower limit, the range support level of this complex sideways range that is in place since 25th of June 2025 low. And what's interesting over here is that after the test yesterday of this 65.95 slash 65.20 short-term pivotal support, the hourly RSI now shape a bullish divergence as you're speaking, and also right now it managed to break above the parallel descending trend line formally, indicating a bullish breakout from the hourly RSI with a prior bullish divergence, so indicating that we may now start to see the return of a short-term intraday bullish momentum for the West Texas crude oil to support a float up towards the upper limit of the sideways range configuration. So we'll still maintain our bullish bias view within this sideways range configuration that is still in play for West Texas oil, with 65.95, 65.20 as my short-term pivotal support level. Intermediate resistance level to watch for today, 67.40, which confluence with the 50-day moving average and the 20-day moving average. A breakout above it exposes 69.15 slash 68.50, which is the 200-day moving average. However, if price action instead of floating upwards towards the upper limit of this sideways range configuration, and if it did a bearish breakdown with an hourly close below 65.20, then potentially the WTI crude oil may shape a bearish breakdown within this 4-week plus of range configuration to expose the next near-term support level at 64.06, followed by 62.50, which is the minor swing low area of 3rd of June and 4th of June. All right, so that sum up the intraday technical outlook on all the major cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So today key data at the start of the European session, or at 5 p.m. Singapore time, we will have Eurozone retail sales figure that could impact the euro dollar, the euro crosses, and the Germany 30. So as we head into the US session, it will be rather quiet. So what we will have over here is the EIA crude oil stockpile change, the weekly stockpile change, releasing at 10:30 p.m. Singapore time. So that could potentially influence the intraday movement of the West Texas crude oil over here. And thereafter will be a quiet US session. And at 2 a.m. Singapore time, we will have a Federal Reserve official Cook speaking over here. And before we go, there's also some key earnings that I want to share with you guys that could impact the Nasdaq 100 movement when the US during early Asia session tomorrow. That means after 4 a.m. Singapore time tomorrow over here. Let me see, is there any or not? Okay, so tomorrow will be Wednesday. Oh, nothing. My apologies. Nothing. So, but however, before the start of today's Asia session, before the start of today's US session, pardon me, before the start of today's US session, two key S&P, not really that key, S&P 500 component stocks, not the top 20, is something around the bottom part, the middle range. McDonald and Walt Disney will report their earnings number before the start of the US session. All right. So with that sum up today's daily dose of market insights. I'm Kelvin here signing off. I wish you a great day ahead, and we shall speak again tomorrow. Thank you.